Boom! What's going on, guys? Welcome into your Energy News Beat here on this gorgeous Friday, February 19th, 2021. As always, I'm your humble correspondent, Michael Danner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. Woo! It's been a long week, baby. Thought out?
Yeah, a little bit. In fact, my wife has power finally. It's a beautiful day in the neighborhood in Bear Country, and we got a hall pass.
That we do, guys. You can check out what we have on the show over to my left here. We've got DRW coming up, so we're going to keep what me and Stu have to a minimum, get to the main event. But first, guys, just continue to subscribe to the world's greatest YouTube channel, EnergyNewsBeat.com, the best place for all of your daily energy finance takes. And also check us out online, www.energynewsbeat.com, the best place for all of your energy news. We have a notifications button in the bottom right corner. It's legit just an IV of news. If you're like me and just need to walk around with an IV drip of coffee and news, it's the perfect place to get signed up. And when we look at the equity markets today, pretty flat. We'll go ahead and read top-line indices off first. SPY finishes pretty much flat, about down a tenth, about 0.01%. NASDAQ finishes down 0.3 percentage point. Dow Jones finished on the upside about a tenth of a percentage point. The key is also 10-year Treasury yields rose again higher, another 7 basis points, bringing us up to 1.3%. That caused Janet Yellen, Treasury Secretary, to come out and say two things. One, she believes that inflation is not the biggest concern right now. Her quote was, "Inflation has been very low for over a decade, and it's a risk, but it's a risk that the Federal Reserve and other have tools to address, aka raising interest rates and completely slamming." Now, there was some interesting there. She also came out and lobbied very hard for a $1.9 trillion stimulus plan that's set to be voted on the House of Representatives today. Most likely will pass the Democratic-controlled House of Representatives. The Senate, on the other hand, we will see what's going to happen in terms of some of our top line numbers that happened today. Russell 2000 was up 2 percentage points. That's a little bit better of an understanding of how the overall markets are doing. Give you guys an idea. Facebook, Amazon, Microsoft, and Netflix, what we call FANG stocks, they were down 2 percentage points as a total today, so not good for those bigger tech stocks. Let's go and move over into the oil and gas sector for a second and cover crude oil prices. Not a good day as one, I think it's just a breath pullback. We lost about 1.6 percentage points off our WTI index, currently trading about 55 or 59.55. Brent 63.15. That's down 0.75 of a percentage point. Back end of that WTI curve loses about 1%. Again, I think it's just a collective breath. I think there's some Saudi stuff coming out. They're raising prices. We talked about that yesterday. So I think the tea leaves are we're probably going to see an increase in the production level out of Saudi Arabia. They want to turn the taps back on. Interest rates, as the dollar continues to strengthen and as we start seeing maybe some of these signs of inflation. I mean, there you go. Treasury Secretary just came out and said, we don't really care about inflation. Well, that means inflation is coming. So it's an inverse correlation. The stronger the dollar does, the weaker oil does. Now, if inflation kicks in, the dollar does get weaker. So there's these two balanced things that are being ripped. Again, we're looking at long-term interest rates. Don't just look at crude oil supply and demand. We got to be knowing what's going on with the dollar. Natural gas, little steam today. Lost a little bit of steam. Currently trading $3.08. That's about 0.2 of a percentage point on the upside. Back end of that natural gas curve, though, that traded up to $3.14. That was about a 2% on the upside. XOP, which is our E&P securities contract, up 2% today. OIH, which are oilfield service, it traded up 1.9 percentage point. Some of our biggest equity movers on the downside, Contango Oil and Gas, not good today. Sanchez Midstream down 4.5 percentage point. Camber Energy down 9 percentage point. Big movers on the upside, though. Amplify Energy up 8 percentage points. Permafield Royalty Trust, they're up 11 percentage points. PBF Energy, they're up 12 percentage points. And Ramaco Resources up 15.9 percentage points. All right, Stu, International News Desk, baby. What you got for us?
Well, besides being tired all week, I got one story here, and it is an outstanding review of Nord Stream 2, twists, turns, and a controversial pipeline. This is outstanding journalism. Boy, I can't even talk. It's Friday afternoon, and it's 5 o'clock somewhere. Hey, this is really a political time bomb going on. We're going to be anxious to see what Biden does over the next week on this. Since we just joined the Paris peace accords, we're going to have to see how all this is handled. We have sanctions on them right now. Germany needs the pipeline bad. Russia is gaining more and more control over Europe every day. Anyway, it's going to be an interesting article. Back to you.
Yeah, the international stuff's been wildly busy this week. You can check out all of those stories via the world's greatest website, energynewsbeat.com. Really, we had a lot of earnings that were supposed to happen this week. Obviously, with the blackouts and weather events in Texas, that got pushed. So the only thing we really saw today was rig counts came out as flat. That's not going to really help oil prices. Currently sitting at, what's the rig count? Is it 397? So I mean, we're about ready to touch that 400 mark. Probably hit it next week. You know, Again, we're going to see Oxy, Pioneer, Interplus, all these people rescheduling all of their earnings for next week, so it's going to be another big week for earnings. But, Stu, I think we just go ahead and kick it over to DRW.
Sounds fantastic.
Awesome. Well, stay tuned, guys. DRW, after he's done, hall pass, baby. Well, again, DRW, as always, we appreciate you joining us here on this Friday. That means a hall pass is around the corner, so I'm excited. 10 minutes, we'll get you out of here. Obviously, the first thing we have to cover, as in Stu was dealing with this all week in Texas, what was going on with the power outages. And I think it's good. Can you give us a 10,000-foot view of maybe what led up to this, whether it was infrastructure, some of the stuff that happened, and then some of the fallout that you're seeing that's going on in Texas right now?
Yeah, I mean, I think that this was the winter hurricane, right? Where you get an unusual weather event that comes in and it impacts infrastructure in ways that are not necessarily predicted. And so I think the wildfires in California are another great example where everyone's blaming, the electric utilities, but we're building houses in places and then forest management isn't great. And then power lines are drawn on and then there's heat and then there's drought. And so to me, the Texas story is simply this. It got cold and the infrastructure is not built for that kind of cold. Now, I don't blame that on climate change. I blame that on winter. So winter arrived just like it did in the Game of Thrones. Winter is coming. Winter arrived. And as a result, we had some infrastructure that was not managed the way it would be in North Dakota or in Canada, with heat tracing, with abilities to, with lower water content in pipelines. So you have some freezing, which leads to fall offs. And then the narrative takes over, where everyone who's a greenie wants to say fossil fuels failed, look at how that worked. And everyone who's in fossil fuels says the greens didn't work. The reality was there was a failure of the grid, and we dealt with it when you can turn stuff on. And so wind you can't turn on. And so the big takeaway number one that should come out of this is intermittent supply. You can't create solar at night. You can't create wind when it's not windy. So therefore, you will always need backup to 100% of the amount of capacity you have in those things. The only reliable source is fossil fuels or nuclear. That's just the way it is. We have the fossil fuels, and the fossil fuels in this case didn't work as expected because we weren't prepared for that kind of weather. Just like in a hurricane, when power goes down, we don't say, oh, we need to. Sometimes things just go down. So they fix it and we learn. So I would anticipate that ERCOT, which is the big utility company that does the distribution, will be asked a lot of questions and they will have to upgrade their system. But at the end of the day, these things happen and fossil fuels came to the rescue because we need power of all kinds. And so when I was whirlwind touring in Wyoming, I said, thank you, coal, because coal played a very big part in keeping people warm.
Yeah, I'm surprised at the way it was described to me is we basically had, a 100-year flood event in Texas. It rarely gets this cold. And ERCOT just didn't plan for this. And me as somebody who used to work in the risk management space, like, well, how do you not – that can't allow that to happen even at the bare minimum. You can't have 4 million homes off. So it'd be very interesting, I think, what's going to happen with some of this ERCOT fallout because to me it just seems like even at the worst case scenario, you got to be able to fire up plants in 15, 20-degree weather. I mean, I joked on our show the other day, don't mess with Texas unless you have 6 inches of snow. Then you can for sure mess with Texas.
Well, but let's take a contributing factor to that, which again, as data comes out, but we know these things to be true. In 2020, we shut down and a lot of people were working from home. And I know that ERCOT had only done a virtual tour of inspection to prepare for winter because people were too afraid of COVID. So there is a COVID factor here, which is people weren't on location doing inspections. They weren't doing the planning that we do in offices. And so all of this comes back to, like, we're band-aiding this with this work from home COVID thing where people are just just sitting around at their house and not collaborating and doing virtual meetings. And so the real shit, when this thing happens, we're not prepared. We need to get people back to work. We need to get back in the office because we prevent these things when people are in person. We don't when we're working from home. I think that will be discovered to be a huge contributing factor in this.
David, I'm wearing this hat because I absolutely loved your Chevy Chase vacation road trip. I absolutely love it. My hat it's stuck to my head, but my hat's off to you. Well done. Your messaging around the fossil fuels, the coal saved our day, especially out of the state that you were in, 60%, and your Tesla story. That was huge. Anybody who's missed it, it's in the show notes. But outstanding job, David. Also,
thank you.
One of the questions. China has 80% of the rare earth minerals around the world. 17 of those are really needed for rebuilding an infrastructure and everything else. So out of this, you talked about governance, and they're going to have to ask ERCOT is going to have a lot of questions. So how are we going to be able to do it if China is holding our feet to the fire? And one other just small caveat, I like Texas power being separated from the federal government because the federal government can't run it either. So I think if we just had governance in Texas, I like Texas being left alone. So anyway, all that being said.
Yeah, I mean, the China question is interesting, and it ties back to a theme that I've been writing about all through 2020 is we are going to de-globalize as a result of what happened with coronavirus. And the reason is because the financial insecurity that has come from us pumping our own stimulus and trying to protect our own dollar and having to create American jobs. We currently, the trade surplus with China is something like $570 billion. And so beyond the power question, 74% of coal-fired electrical generation capacity in the world exists in Asia. And we outsource much of our production and manufacturing of things like solar panels to Asia. So even though we don't want to use coal, they're using coal. So we're using coal. But I do think we're going to see, as we see food hoarding, as we see grain issues, as we see rare earth, oil. In the 1990s, the geopolitical crisis that was coming out of the Middle East was based on a fear we did not have enough oil. We went to war over a commodity to ensure that we had supply. We are going to see more nationalism out of China, where I believe the number's 80% of rare earth minerals are mined. If you don't like oil sand strip mining in Canada, you are not going to like lithium mining in the United States. And so, again, we're totally forgetting where this comes from because we're comfortable offshoring it and then woke virtue signaling in the US about some climate model that may or may not actually impact us. It's beyond me. So no, I'm deeply concerned that on grains, on commodities, on rare earth, countries are going to start resource hoarding, and resource hoarding leads to war. That's where we're going.
Yeah, I had an opportunity to listen to Elon Musk, who went on Joe Rogan last week. Even he brought it up. He brought up the fact that, hey, we're going to use fossil fuels for a long time now because we don't have access to a lot of these rare earth minerals. So I think even the people who are on the forefront of some of this EV stuff deep down know this. I want to quickly pivot before we end here because this was one of the busiest weeks we had for E&P earnings. We've covered a bunch of them on our show. Anything you learned about anybody we saw out this week from the earnings fallout?
I mean, again, I think that we continue to look past current earnings to future earnings, and those companies that hedged at 40 are getting knocked because they're like, wow, how could you have hedged so badly? But if hedging was part of a structural program that they had every year, you wouldn't need to fire sale hedges at a spot in time because you're never going to guess right. If you'd been hedging in 2019 when I said, if you'd been hedging in 2018 when I hedged, if you'd been hedging at the beginning of 2020, you would have layered in structural hedges and you would have been fine. But again, investors are looking all the way through this. I do think we're starting to see some cracks where obviously, the back end of the interest rate curve is going up. The Fed continues to buy $120 billion a month of bonds and products to keep short-term rates down. And whether you have a mask mandate or not, we're seeing places like Idaho, we're seeing places like Montana, we're seeing Iowa, South Dakota are moving away, and their cases are falling just like they're falling everywhere else in the world. So we're going to wake up 3 weeks from now and no one's going to have coronavirus and everyone's going to be forced to take masks off. And then the Band-Aid that we've been doing with stimulus and shut down and save every life, once all that comes to an end and people realize we have to face an economy, I think they're going to see that it's nowhere near as good as people like to hope it is.
One real quick question. I think inflation is going to hit hard. What are your thoughts?
Absolutely. And I think inflation is hitting hard and the CPI is just not measuring the correct. If you go buy toilet paper today versus where you bought it a year ago today, toilet paper is up, food is up, supply chains are broken, college is up, healthcare is up, everything is up.
I bought milk yesterday. I was like, what is it, $4 a gallon?
Oh, everything is up and CPI is hiding because the Fed knows if they raise interest rates, we now have to face the piper of debt. And I'll give a story. I'm an investor in an apartment complex in another part of the country. And there is an eviction moratorium. And that eviction moratorium, some people have chosen they're just not going to pay their debt. They haven't filled out the forms, but you're not really able to evict them. And they're $8,500, $9,000 behind on rent, which the landowner is eating under the hope that they get it. But the second that they don't get it, a $600 stimulus check doesn't change an $8,500 of 8 months of rent due. And if they don't have a job, there's 15 million people that are underemployed and people aren't going to movie theaters.
Right.
And so
underemployment, you talked about, Key. They talked about that in the Fed Minute Notes last week where Jay Powell specifically came out and said, the unemployment rate's not what we're seeing at 6%. It's drastically higher because people have just stopped looking for work. But don't worry, I'm watching CNBC. Janet Yellen just says more stimulus is going to save us. So don't worry, the Fed's got us.
Yeah, so I think we have a lot of challenges that we're going to have to face when we open the economy, which is part of the worry about opening the economy. It's really easy for AOC to tweet about fossil fuel billionaires and say, look at what they're doing and they're gouging and they're purging and climate change, because it's an ethereal thing we can't fix based on a model that occurs 50 years from now in the future. But what I really care about is when my house gets cold and I can't turn on my heat and I can't turn on my computer and I can't work from home and my kids can't go to school and they can't learn and I can't pay my rent, I'm going to start asking some very difficult questions of my politicians, which they know are coming the second they open the economy. And that is the biggest risk our country has.
Yeah, it's sort of all coming to a head. And at some point, all this spending we're seeing in the credit, it's not good. We don't want to be doom and gloom, but happy Friday, guys. Any final thoughts before we let you go? Anything next week? I know there's a bunch of earnings rolling out. What are you looking for? You think Texas, you think some of this ERCOT stuff will get cleaned up next week?
Stu, jump in there. I know you wanted to say something.
I just want to say, David, all your points are rock on solid. And guess who gets hurt the worst? The poor folk. Any of the disproportionately impacted communities. And that drives me nuts that our leadership makes policy decisions without thinking of the poor people. Sorry, off to you.
Well, no, then the worst part is that then they're telling the poor people that they care about them, and they don't, because the top 10% owns 90% of the assets, and stimulus has done nothing but drive up the stocks of the wealthy, while we can work from home with our educated degrees in our warm houses with our backup diesel generators. And the people who voted for the Democrats, who are actually pushing this and pushing the hyperinflation in assets, they're the ones that are hurting people, and no one is talking about it because they're going to lose votes if they do. So what comes up next week? Yeah, I think we'll see a little bit of a reckoning out of Texas. I'm going to be in Midland. If you want to reach out to me on LinkedIn and want to get a coffee, I am around. So let's try and coordinate a schedule. Earnings will continue to roll. Cases will continue to fall. Vaccines will continue to be rolled out. And coronavirus will be behind us. And we'll wake up and say, wow, what have we done to our country?
Yeah, it'll be unbelievable. Again, we really appreciate you taking the time, David, today. You can follow him at hottakeoftheday.com. As always, guys, we appreciate DRW showing us, but you guys have got your hall pass. We're going to let you get out of here, get back to work, and ditch on our dime. For Stuart Turley, I'm Michael Tanner. We will see you guys on Monday for the Energy Beat. Have a great weekend. Smoke them if you got them.